Yo, what's up everyone? Welcome back to another episode of Weekly Roundup. My name is Frankie.
And I'm Ryan from the Coffee Break.
And as usual, special thanks to the Coffee Break who helped us to compile all the juicy news of the week and bring it right to you guys.
Remember, subscribe with the link below and stand a chance to win 1,000 ringgit when you subscribe by the 30th of April. So you can stay informed and get rich. Not bad, right?
Yahweh. So quickly go and check out the link below and sign up to the Coffee Break. And for those who prefer to listen to us on podcasts, we are also on Spotify. Just look out for the Weekly Roundup by the FAQ show. So when it comes to the economic condition and things like that, right, you can't help but to talk about the interest rates. And a lot of people are expecting the interest rate to be cut this year, right? Because we have experienced quite high interest rate for the past 2 years already.
Even locally and abroad, right?
Yes. And the reason for the interest rate hike in the past 2 years was because a lot of governments, a lot of central banks, they want to bring inflation down. If inflation is too high, then things gets too expensive, then it will affect people's livelihood. So now is the time that central bankers think that it's probably enough, inflation is under control, so they want to start to bring the interest rate down. But the thing is that, especially in the US, inflation is still stubbornly high. If I'm not mistaken, the most recent inflation report in the US, they are still registering about 3.2% of inflation in March, which is still quite a fair bit away from the Fed's target of 2%. And as a result of that, the Fed has pretty much signaled that there won't be any interest rate cuts anytime soon. If you recall, not too long ago, the Federal Reserve was talking about at least like 3 to 5 times of cuts in 2024 itself. So suddenly there's a shift in narrative.
Looks like the inflation about 3.2% in March. So it's not taming lah. As much as they want to say there'll be all these terms will use soft landing, and all that, but it's not happening, right? And I think even like BlackRock's CEO Larry Fink recently told CNBC that he predicts US Fed will cut at most twice only this year.
So the thing is that because US is the world's #1 economy, and therefore whenever the US moves something in terms of monetary policies, most of the world will follow. But this time round, right, the situation is a little bit different across Europe.
Okay.
The European Central Bank's president, Christine Lagarde, said that if nothing goes wrong, they are going to start cutting interest rate as early as June. But this is provided that nothing goes wrong.
Nothing goes wrong with the Middle Eastern conflicts.
Yes, correct.
The Eastern Europe conflicts and all that, right? Correct. Because that has a huge part in driving inflation. So with near term, hopefully things stabilize. Whatever's happened in Iran, Israel, Ukraine, Russia, these are some of the major oil producers around the world.
Correct. If anything goes wrong with the major oil producing countries around the world, then the production of oil and gas could be affected, and that would result in oil prices go up. And if that goes up, obviously inflation is going to go up, then that may affect Christine Lagarde's plan to cut interest rate around that period. So early in April, there was an attack on the Iran's embassy in Syria. And as a result of that, obviously Iran wants to retaliate. And because of that announcement, the world was getting a little bit panicked. And
very jittery, right?
And it drove oil prices up to, I think, close to $90 per barrel.
Yeah.
But subsequently, as expected, Iran did some retaliation. They fired drone strike to Israel.
I think about 350 drones.
350 drones.
Missiles.
Yes, correct. And that's one of the largest missile strikes
Ever. Wow.
Yeah, but most of the missiles were actually shot down by the air defense systems. But that's not the point. The point is that after the airstrike happened and all that, the oil prices was rather calm. And we always say that the market is right, the market is correct. Well, if the market thinks that this tension may not escalate, then oil prices will not go up. And maybe the market is trying to signal to the world that I think things are going to be fine.
For now. Who else will cut rates if things are going to be okay?
Well, the two largest camps are obviously US and Europe. I think if both of these region they start to cut interest rate, obviously the rest of the world will start to follow as well. Malaysia also probably will be one of them to consider cutting rates. If not, then suddenly Malaysian ringgit will appreciate so much that it will make our currency look not so attractive in terms of import and exports, trading activities.
But inflation locally also will have an impact on it as well, right? Because the government may not want to have too much money in the market, to have too much spending per se in the market, because more spending in the market will probably overheat the economy, and then they will have to increase rates even further. And again, it's like a domino effect lah. When you increase rate further, your manufacturers won't be so attractive anymore, and your tourism also will be more expensive, and your neighbors such as Thailand, Indonesia may be more attractive. Right? But right now we are seeing a lot of tourists in KL. If you're like around KL, you see a lot of tourists from all over the world. So it's a good sign for now. Right.
Yeah. So coming back to the topic of interest rate in Europe, as we all know, UK is not part of EU anymore, but UK is still one of the most important economies in the world. So people still look at UK and see what they are doing. While the European Central Bank signals that they may start to cut interest rate in June, the Bank of England could cut interest rate in May this year. And this is according to Morgan Stanley's chief economist, Jens Eisen-Smith.
Well, that's as soon as next week.
Yeah, because now we're at the end of April, so perhaps in a few weeks' time, we could hear announcement from the Bank of England, but let's see whether they will cut the interest rate or not by then.
So this interest rate cut didn't come from nowhere, right? For context, UK inflation is slightly to 3.2% in March, down from 3.4% in February. So it is easing in the UK.
Bank of England governor also mentioned that at the rate of this inflation coming down in the UK is pretty much within their forecast. So if nothing goes wrong, maybe we could see the Bank of England starting to be the first country to do a rate cut.
Yeah, but it would then have some pressure on the US to do so, right?
Yes, correct. Because if Europe countries starts to cut interest rate, then obviously the euro value will start to depreciate. You may see it as a bad thing, but from a different perspective, then suddenly European products look cheap. Perhaps all the investments will start to plow into the Eurozone, pulling away all the money from the US. And this is where the US may feel the pressure lah.
I think we talk about how interest rates and exchange rates sort of play a role, right? But Frankie, can you sort of explain why does the interest rate impact the exchange rate?
Okay, so you see, like, let's use ringgit as an example. When our FD rate is high, obviously people would want to save their money in ringgit and put it in FD, right? But if you're a foreigner and you do not have ringgit, the first thing that you need to do is exchange your domestic currency into ringgit first. That will create a demand for ringgit. So that's where, when interest rate is high, the exchange rate will also follow to appreciate together with the height of the interest rate.
Okay, I think good for the economy for now, but let's go into the investors' favorite season, earnings seasons.
Oh yeah,
right. And again, we will talk about semiconductor because I think semiconductor is a big focus of probably the next few years.
Yeah, and tech stocks have been dominating the major indexes in the US as well, like the Magnificent Sevens, right? We talk about Nvidia, Apple, and stuff like that. But what's the news here?
So today we'll talk about the advanced semiconductor materials lithography, which is a key developer of semiconductor in manufacturing equipment. So essentially, it is the only supplier of machines that are needed to build the most advanced chips in the world.
Oh, you're talking about ASML lah.
Yes. And these machines cost like hundreds of millions of dollars each. One machine, right?
Yeah, one machine. And typically you need at least a few machines to produce the chips.
So like some of his main customers includes world's top processor foundries, Taiwan Semiconductor Manufacturing Company, TSMC, Samsung, Intel. In fact, TSMC and Samsung itself accounted for over half of ASML's 2023 sales.
Oh, so they must be doing very well lah.
For the first quarter, surprisingly not. ASML reported a net profit of 1.2 billion euros. But that is much lower. That is like 40% lower than the profit it reported in the preceding quarter, Q4 2023. And what's more shocking is that the bookings for new orders fell by 61% to 3.6 billion euros.
Booking for new orders means that it is an estimation of future revenue lah. So you are saying that the future revenue could fall by 61%.
Yes, it fell from, the previous quarter they reported 9.2 billion euros. This quarter, 3.6 billion euros.
Wow. Does that mean that tech stocks are really not going to grow that much going forward?
Not really. I think it also depends on where you are, right? Because this whole thing about semiconductor is really a geopolitical risk here. The key thing is the tension between US and China, right? Where US seeks to restrict China's access to advanced technology. So ASML said it had been blocked from exporting its advanced machines to China.
So this 61% drop, mainly maybe there's some cancellation from the China side lah.
Yeah.
Okay.
So like you said, the tech stocks are all quite closely related. Once ASML announced its financial results, right, all the other tech stocks suffered a sell-off on their share prices.
Yeah, AMD stock price fell over 6%, Nvidia shares fell 3%, Intel fell 2%, Qualcomm was off over 2%, and these are the performance on Wednesday itself, 1 day performance. But the biggest drop that affected chip technology is actually ARM, the new company that got listed recently. This company was trading nearly 12% lower on Wednesday after ASML reported their net profit.
So this is also sometimes called a concentration risk in some ways, right? When you put all the eggs in one basket. But I think for them, if it's mainly a geopolitical risk instead, despite having TSMC and Samsung, they're not based in China.
Okay, so what I can think of is that if the orders for ASML is lower, it means that their major customer, like you mentioned just now, TSMC, Samsung, Intel, means that all these customers, they could be buying lesser machines. So does that mean that all these companies also not doing very well?
No, you'll be surprised because that typically is the case, right?
Correct,
if you look
correct.
at the supply chain, if your machine supplier are not doing too well, means there's less demand, right?
Correct.
But I don't think that's the case for TSMC. So TSMC is doing just fine. When it reported its financial results last Thursday, the revenue rose 16.5% from a year ago to 592.64 billion Taiwan dollars.
Woo.
Right. And net income increased by 8.9% from a year ago from 225.5 billion Taiwan dollars.
Wow.
And
Okay.
TSMC is the world's largest producer of advanced processors and count on companies such as Nvidia and Apple as its clients. Its revenue itself accounts for 61% of the global foundry revenue in the fourth quarter of 2023. Well, Samsung came in a close second, taking only 14% of the market.
Okay, not very close. If you think about it, because TSMC is the world's largest producer of advanced processor, right? So if any company that is going into all this AI technology, AI innovations and all that, I think most of them are working with TSMC today because they are the one with the 3 nanometer chip, which is one of the most advanced chip in the world today. So this strong demand for AI chips led by the proliferation of large language models such as ChatGPT has caused TSMC share price to surge by 56% in the past 1 year itself.
Yeah, so remember like the earthquake that happened and many people were worried that it would impact TSMC because TSMC is based in Taiwan.
Yes, correct.
But luckily enough, there were no power shortages. We spoke about the last time, they were resolved relatively quickly and there were no structural damage to also their critical tools. Some products may still be damaged, but TSMC expects most of the lost productions to be recovered in this quarter, the second quarter of 2024.
So the damage is minimal. I think that can be seen on their share price as well. It is relatively stable. So I think not too much impact over there. Okay, so when we talk about all these AI innovations and all that, a lot of things will go into car. Today, car is not just a machine that drives, right? It's about putting a computer into the car.
Yeah, it used to be very mechanical.
Yes.
When there were internal combustion engines. Internal combustion engines today, even cars with also has a lot of computers already today. But electric, of course, it's really literally a computer with 4 wheels.
So EV is the thing now.
EV is the thing, but is it? I mean, it was the thing for the past couple of years, but I think it's slowly losing its steam. And this is because the demand for EV has also stagnated over the years.
Yes, actually a lot of car makers also start to cut down the production of EV cars.
Correct. In the UK, for example, insurers and repair car companies have actually revealed there's a shortage of mechanics trained to handle the most advanced EV fixes.
Yeah, that's not surprising because a lot of all these mechanics, like no need to go far away, just talk about Malaysia, right? A lot of our mechanics, they are still very...
Still handle the ICE engines lah.
Correct.
Right?
And if you bring an EV to them, they'll be like, I'm so sorry, I don't know how to repair your car, you need to go back to the manufacturer.
Precisely. So it is driving up the repair costs. And what this then in turn happen is that it's making insurers to write off EVs with very benign damage.
Oh.
So like those fixes that can be fixed, but it's going to cost a lot because your mechanics are going to be expensive. And if they're lengthy wait times, they rather just scrap it.
So we always talk about buying a car is the worst investment because once a new car touches the road, it's straight away devalued by 50%. So that is for ICE car, So you're talking about if you are driving an EV, once a new EV touches the road, right off.
I mean, no lah. I mean, if it gets into an accident, if there are things that need to be fixed, because there's so much computers inside, right? And there's also battery, so it's a bit more touchy, right?
Yeah.
Engine, you can still fix it, but battery, that literally is the engine. And if any leakages to the battery and all that, it gets a bit more technical and iffy to fix. And there is simply not enough mechanics to do so, right? According to the Institute of Motor Industry in the UK, which provides training and certification to these mechanics, right? Fewer than 10% of UK's 236,000 mechanics are qualified to work directly on EV batteries or their cases. So it's really a technical skill shortage that is causing this. And according to Bloomberg, right, the cost of insurance for EVs are reported to be double that of conventional vehicles.
So owning an EV is not that cheap after all lah. Even though there are a lot of subsidies from government to encourage people to go into EV, but there's a lot of hidden costs now starting to arise.
Yeah, so Malaysia is starting that process of having, incentives to do so. But few years down the road, when there are more and more EVs and not enough mechanics, this is going to be the problem. Not enough charging ports. It's also going to be a problem. And in fact, it's also making one of the biggest EV manufacturers. Tesla has announced its plan to lay off more than 10% of its global EV workforce, according to a memo sent by Elon Musk. So the world's most valuable automaker actually employs about 140,000 employees globally as of December. So now you'll take about 14,000 people off its workforce.
That's quite a lot of people.
Yeah. And he reiterated that there was nothing he hated more, but it must be done to ensure the survivability of the company. And you look at Hertz also, we've recently talked about Hertz.
Yes.
So car rental company Hertz announced in January that it was selling 20,000 of its electric vehicles in its fleet, or about 1/3 of the EVs it owned. And it is now replacing the CEO, which helped to build the fleet.
Maybe it was a bad decision to put in so many EV cars into the fleet.
Yeah.
Now that they realize that the cost of maintenance is so high and when you sell there's no more value, it actually hurt the balance sheet of Hertz. Therefore, he has to take up the responsibility and maybe be replaced.
Yeah, and this is not like random CEO, right? Like he's an experienced CEO. So Stephen Sher, who came to the company 2 years ago, after 30 years at Goldman Sachs, has stepped down as of March 2024. And Hertz in the most recent quarter also announced that it took a $245 million hit to its earning due to a drop in value of the EVs it was selling.
I think the moral of the story here is that when there's a new product like an EV coming into the market, right, it's better to let the product be a little bit more mature first before we decide what we want to do with it. In Malaysia, I think the EV market is just started to emerge. Everyone is very excited about it, but we do not have the experience of handling EVs.
We don't. Even like some of the biggest companies, look at Hertz. Hertz is a big company.
Correct.
Because I think there was a hype in getting EVs, but the whole idea was that if you rent a car, why would you rent an EV car? Unless you drive in the city, but people who rent cars are usually travelers who drive long distance. There are very few, maybe business guys who drive 100, 200 kilometers, but if you're driving long distance, you're going to have the infrastructure to charge the cars. So it's also maybe like a warning sign to rental companies in Malaysia. Hey, if you rent EV, maybe for city driving, that's fine, but anything more than that, probably not. Let's wrap it up with the most exciting news of this week.
This video is recorded on Thursday, 18th of April, but by the time you watch this video, it will be a couple of days later, which the halving of Bitcoin would be completed. But as we speak now, we are still very excited about it. It's yet to happen. So we are very excited about it. While everyone is excited about it, saying that when halving is here, the price is going to jump 100,000, 200,000, 1 million and whatnot, right? But I actually try to justify the numbers through mathematical sense to see whether this can really happen or not. So for context, at halving, at the block height of 840,000 on Bitcoin blockchain, the new reward for Bitcoin mining will be reduced by half from 6.25 Bitcoin per block to 3.125 Bitcoin per block. Okay, so this is point number one. So point number two is that the Bitcoin blockchain produces 144 blocks a day. So if you take 3.125 new Bitcoin per block, you times that with 144 blocks per day, every day there will be 450 new Bitcoins of supply coming to the market. But according to a website that I recently found, it states that there's a total of roughly 385,000 Bitcoin transactions per day. So day in, day out, there's around 385,000 Bitcoin transactions. So if you think about it, right, new Bitcoin supply is about 450, but your daily transaction is 385,000. That 450, right, is just like a drop in the ocean. It really cannot move the needle in the market. So if you say that the halving is going to cause Bitcoin prices to go up in the immediate term, I think that is unlikely. But why is everyone still so excited about the halving is because over the long term, as more and more people understand Bitcoin and they start to adopt Bitcoin, demand will go up. But because the halving and you are limited to only 450 new Bitcoins per day, the supply is going to be capped.
Yeah, and this halving happens every 4 years. Right?
Yeah. So as new demand comes out but your supply is limited, that's where the long-term price appreciation may happen on Bitcoin.
And we've seen this in the past cycles as well. The behavior seems to be as such. 2020, 2016, 2012 seems to have this kind of behavior, but post-halving, there's always a bull run. Not financial advice, by the way.
Yes, correct.
But it is the behavior of Bitcoin, and this year itself, you're seeing a run-up before halving. Post-halving, not too sure what's going to happen. It will hit the 70Ks early this month, then now it's like 60 over 1,000. I don't think the 450 matters in the number of transactions though. It's more of the supply and demand, like you said. So we will see.
Now, there's one more fun fact that I realized when I did this calculation. Now, every halving, the reward will be cut by half.
Yep.
So now it's 3.125, you cut by another half, it will be 1 point something. And then we'll cut some more, it's 0.5. But every 4 years, as you cut by half and half and half, do you realize that it will never be zero?
Yep.
Yeah, anything divided by half can never be zero. The only way to become zero is you do a deduction. So meaning to say, as halving happens over the years, it would take like hundreds of years to become near to zero. That's another beauty of Bitcoin, right? So moving on, as new blocks being created, new height is being created, actually there will still be reward there. It's just that the reward will become smaller and smaller. And in order to justify the mining reward going forward, maybe Bitcoin price has to be at a certain level to make sense for people to continue to mine.
To continue the transactions. The transactions are still happening.
Yeah.
Right? But in order to enable for the transactions to happen, mining has to be done.
Yes.
Because of the proof of work. Let's see.
Yeah, so that's all for today. I hope you guys are excited as we are about the Bitcoin halving. But stay tuned to our next episode of Weekly Roundup. See you again next Tuesday.
Take care.